Hi, my name is Lon Welsh at Your Castle Real Estate, and I want to talk a little bit about what has been happening at the entry level of the Denver real estate market and what's likely to happen over the next couple of years. So I've got a couple charts here. These are from Zillow, and you can see in the fine print who the source of the data was below that. On the left-hand side is the number of single-family starts. This is new construction. So we have about 340 million people in America, and that number is growing at about 2% per year. So we should be adding about 2% to our housing stock every year to keep pace with all these new families that are being created all the time. And if you take a look at the new housing starts, you can see the average from 1980 to 2020 is that we should be building about 1 million new homes every year. But you can see there's an awful lot of volatility to that. In the 2000 to 2005 period, a lot of over-enthusiasm for the real estate market. We were building 50, 70% more homes than would be indicated by population growth. Then in 2007 to 2009, we built about half as many homes as we should have been because we were in a big recession. Banks didn't want to lend, and we had this gigantic bubble of inventory on the market of foreclosures that had to get sold first. So you can see over the last decade that we've crawled our way out of that terrible hole for new home construction, and we're just now getting to the long-term average, despite the fact that there's over 100 million more people living in America now than there was in 1980 at the start of this chart. We really should be building more homes than this. On the right-hand side, you can see the inventory. So you can see the inventory now is less than it was about 20 years ago, despite the fact that we've got many, many more people in America than we used to. So the combination of these two things are we're not building enough new homes for the population growth, and there's not very many existing homes being offered for resale, has led to an undersupply of total home inventory to be sold to people who want to buy. And it's been like that for the entire US on average for the last several years. The scarcity of new inventory is what's been driving up the above average price appreciation that we've had, and that's really hampered affordability quite a bit. So as a result, people have not been able to move out of their apartments into their first house as rapidly as they have historically. So the vacancy rates, as you'd expect, have gone down quite a bit. Vacancy rates are actually at about a 40-year low right now. They may edge up a little tiny bit with this recession that we're in, but I don't anticipate they're going to go up a whole lot. Why is that? Mostly because of affordability. So if you take a look at affordability, you can see the purple line is 31% of the income of a typical renter household is allocated to their rent payment versus mortgage affordability for the people who own their home. The typical owner family spends about half, about 16% of their gross income on their mortgage payment. So it's very difficult if you're a renter, particularly if you're also struggling with paying off your student loans or maybe paying for your first car, to amass the 3.5% or 4% down that you need to buy your first house. Structurally, nothing in this recession is going to make this any easier for the first-time buyer. So what does it mean? If you're thinking about becoming a landlord or you are a landlord, all the forces have been in your favor for a long time to keep a large supply of renters competing for the amount of apartments and rental houses that are available. That's probably not likely to change. So if you're thinking about buying another rental, this would probably be a fantastic time to do that. If you're a prospective first-time buyer thinking about buying, if you can, you should, because the prices are not likely to go down in this recession. If anything, they're probably going to go up at about an above average clip relative to inflation. So if you can buy, I would do it now.